The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hello, everybody. This is the tax lady right here on duty to make sure we get the taxes whittled down before the end of the year and keep you abreast of whatever is happening in the wonderful world of taxes. And, of course, I have Tiffany Fabian here in studio with me. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday. And Christopher Fabian.
Hello, Esther.
Hello, Christopher. All right, you guys got Christmas shopping done?
Some. Yeah, because you got to be careful because my one daughter says that I just pick up whatever I want and get her lots of stuff and I don't think about it. So guess what?
Start thinking.
So she doesn't have anything because now I'm paranoid.
Okay. All right, so 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. We're going to talk about last-minute things. I hope that this will help before the end of the year. Now, they're going to change taxes, I got to believe, unless Biden's scores for popularity go much more into the dumper. I am just shocked that they haven't done it for anything for this year. So it looks like we squeaked by, and that's a wonderful thing, especially if you're somebody that was looking at the possibility of them changing the stepped-up basis and the inheritance tax and all that. Looks like that's not going to happen until next year, and who knows, you know?
Yeah.
Yeah, I know.
We will certainly keep you abreast. Yeah.
Build back better.
Somebody today, when we were shooting our commercials, they were like, what's so important about these tax changes that they passed? And, he was amazed by what was passed last year to help low-income families.
Right. One of our commercials says that a family making modest income, like around 15, 16, 17,000, with a family of 5 with children that pay no taxes under this change in the tax law could get refunds over $27,000. I mean, they make like $16,000, $18,000, but get a refund of pay no taxes, nothing paid in, of $27,000.
Crazy.
I mean, but that's just part of, we want to make sure that you get part of that $27,000, and that's what we're here for. All right, before we go into some of the things I have written down here, I'm going to go first and talk to Mike because he's been waiting. Hey, Mike, how can we help you, sir?
Oh, maybe good lotto numbers, but barring that, I just got a question. I caught a small article yesterday about I-bonds, and it said they were paying over 7%. You could buy only $10,000 a year. You had to buy them before the end of December, and then you could buy another $10,000 in 22. Supposedly, you had to hold them 5 years, and if you dropped them before the 5 years, you lost the last 3 months of
interest.
And I guess there was 2 parts. The one part, the interest was indexed every 6 months. The other part, I'm not sure. And I don't know how they affect taxes and whether they're considered taxable federal, state, or...
All right. Well, first of all, any I-bonds that you would get that would pay interest are going to be taxable on the federal, will be tax-free on the state. You have to watch those articles because they're misleading. Sometimes what they're saying, the 7%, is the cumulative total, not the amount that they pay per year. So you have to really watch whether it's cumulative. So if you hold it for the whole 5 years, it's 7% total. So the last time I did research on this, and I think it was you that called, it was a cumulative total, not an individual per year total.
That's why I call you.
Okay.
So cumulative total.
Yeah. So 7% if you hold it till maturity.
Does that make sense?
Nothing makes
But
sense.
I know. Hey, does anything make sense anymore, Mike?
Well, yeah, that's why I called you.
Well, you're so sweet. But yeah, if you want to call on Monday, I will make sure that nothing has changed in the last 3 weeks since I did the research. But it was cumulative, not individual per year.
So around 10:30 or 11, call 632-7886
on Monday.
Have confirmation.
Yep. Okay, Mike?
Okay, thank you.
Hey, Merry Christmas. Thank you.
Hey, Merry Christmas.
Bye-bye. Thank you. Okay, I'm Esther Gulias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Okay, I'm going to go to Ed in Tonawanda. Hey, Ed.
Hello there.
How are you?
Pretty good, pretty good. In fact, what I want to say is I learned so much from you folks. You're like an education.
Well, that's what we want. You know, don't you really think that more people should be open-handed in the way that they're talking so that you know what to do? Because what good does it do if you don't know what to do?
Exactly. But I have a question for you about IRMA.
Mm-hmm.
That's Social Security. That's a reduction of the Social Security
Yep.
over a certain limit, right?
Right, for your Medicare. Yep.
For Medicare. Okay. Now I thought I heard. I'm a state retired person. I heard that the state reimburses that IRMA. Are you familiar with this?
It depends on what tier you are. And I don't know the different tiers off the top of my head, which ones do, which ones don't. So you would have to check with your retirement system.
Benefits.
Okay, I'm tier 1, so I imagine that's probably...
You're probably in it.
So then whatever they cut my Social Security by, the state reimburses?
They should.
And if it's a life-changing event, you can write and, I mean, you know,
Right,
what I mean,
right.
income-reducing crazy event, you can write and try to have
I
it.
mean, should you have to pay more because you had more income, and you pay more in the Medicare? There, like Tiffany's saying, if it's a life-changing event, like you sold your personal residence, you sold rental property, they will forgive that increase in Medicare. So if you need help with that too, but I'd suggest you call New York State and ask them, did you qualify for the reimbursement? And sometimes they don't tell you.
Yeah, because I never got anything from the state. I just got this notice from the Social Security, and then somebody that's a state employee told me. Yeah.
Yeah, give them a jingle and see what happens.
Okay.
All right, thanks, Ed.
Bye-bye.
Bye-bye. Okay, some of the things, and again, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, here's some things to watch out before the end of the year. And like I said, I can't believe they didn't pass any change in tax law. And what was passed at the House, it does not seem to be horrible that's coming over to the state. I mean, some of the stuff, as a matter of fact, the one thing that they're proposing is that the $10,000 limit on the state and local income taxes be increased to up to $80,000, and so that would help a whole lot of people in the state of New York and New Jersey and California. Yeah. So okay, but here's the thing. Advanced child tax credits. So those of you that are getting the $250 per month per kid, that's for 6 till 18, and $300 for kids under the age of 6, you're going to get a letter 6419. We don't know when the letter's coming out, but without that letter telling you exactly how much you got in advance payments for the child tax credit, you have to do a special computation on your 2021 tax return, pointing to the amount of money that you got up front so that credit is going to be adjusted. If you don't use that letter and you just take a whack at it, what do you think will happen, Chris?
It's going to hold up your refund several months because just like the stimulus money, it went to a different department, and that department was surprised, I don't know why, how many returns they had to review, so they were understaffed. So just like what happened with the stimulus will be the same problem.
Right, so if you want your refund, don't hurry up and file your tax return without this letter, because you have to do an adjustment on your child tax credit showing how much money that you had gotten. And some people, right, Chris, are going to find out that maybe the people that have, they switch off children each year, there's another adjustment they have to make.
Oh my gosh, yes. I mean, so if you were the non-custodial dad and you claimed your child in 20 and you didn't tell the government you weren't entitled to it, you still got the extra money, the advance this year, even though you're not claiming your children. But the kicker is, if your income, if you're single, was under $40,000, you don't have to pay it back. You have to calculate it. You have to do the 8812, and that will make it so you don't have to pay it back. But that's incredible.
Yeah, and then there were so many moms who called me this summer. They're like, so my husband got it, so that means that I won't get it this year.
That's wrong.
I know. It is wrong. So that's wonderful.
And not only that, we're talking about it's definitely double dipping, right?
Yep.
Mm-hmm.
And it's a lot of money.
Oh, gosh.
So, but secondly, the state of New York just extended the health insurance for people that don't qualify, but they said you can still do it, right?
Yeah, up to the end of, if your renewal is up to the end of February, you're automatically renewed, and you don't have to show proof of income. So
right. So you make $100,000, you really shouldn't qualify for the New York State of Health adjustment assistance, but they're not looking at it till when, Chris?
Beginning of March now, supposedly, and that's if they don't push it back again.
Yeah. So anyway.
Should we take a break and take Brian on the other side?
Hey, we will. Brian, we're going to get you on the other side. 8030930, 8030930, star 930 on your cell phone. I'm Esther Gulius, the tax lady. We're going to take a short break.
We are family. I got all my sisters with me.
And brothers. Hey, I'm Esther Gulius, the tax lady from EG Tax. We're helping you get ready for tax season, which is 3 weeks away. And I think we have some really good points here, things that you might want to think about if it affects you. But Brian's been waiting. 8030930, 8030930, star 930 on a cell phone. And our text number is 716-8030930. And we got Brian. Hey, Brian.
Hey, hello, Esther. Thank you so much for taking
My pleasure. What can we help you with, sir?
Well, the reason I'm calling is my wife and I were in our 50s, been married over 30 years, and in June of 2021, this year, we received our very first letter from the IRS. And
well, what a blessed event that is. And so what did the letter say, Brian?
The letter said that they received our year-end 2020 1040 federal tax return, and they're looking for further information.
Okay.
And I got this letter back in June, and they said they were looking for further information about our Form 8962 on health insurance and that through the marketplace.
Right.
So we went to our tax person, and within a week or so, he submitted it. And now it's been 6 months, so I thought I'd check in with him just to see if he received any word from IRS. And he said, no, nothing. They're so far behind in their work, I wouldn't worry about it. So I'm just wondering, is that good advice that it's been 6 months and that we never got a confirmation?
They're absolutely far behind. They're far, far behind. However,
did you get your refund?
Yeah,
already?
you haven't gotten any refund, right, Brian?
No.
Yeah. So if you want to call Tiffany on Monday, she's got the patience of Job, and she will call and do a three-way and see how far along they are in processing.
And I think that's not a bad idea.
It's especially slow if they're doing the reconciliation on the 8962, because I have several clients that have been waiting. So give us a call. We'll be very happy to help you.
And the phone number is 632-7886. There is no charge, just want to help.
Yeah. So just give Tiff a call, and she'll put you through to them, and because we have like a magic number to call. So okay.
Great.
All right. Thanks, Brian.
I think it's a good idea to check.
I know I had a call earlier in the week, and they filed an amended return, and the IRS said, well, you got to give us 4 weeks since the amended return was filed, or 4 months. I said, it's been 6 months. She goes, well, you got to give us another 4 months. I said, so 8 months? She goes, yeah, 8 months. I said, well, that's only 2 more months. No. Because it's 4 months from today. And I said, so if I wouldn't have called,
The 4 months starts
the
when you
4
call.
months never would have started. Well, I didn't say that. Yeah, you did.
But Brian didn't even say that they
Well,
didn't amend it.
I know,
Okay,
but
and
I'm
then-
just
and
saying
then,
this
you
is
know,
what.
So we're talking all about the IRS. We got notice this week, you know, because we're opening our offices, you know, and the IRS says that they're going to open up any time between January 17th and February 17th.
how
and we
definitive.
just kind of have to like
Deal
roll
with
with
it.
the punches, you know, deal with it. So just want to let you, when, you know, we'll let you know when they're going to open up, when they let us know. The other thing I wanted to let you know, that we're talking about things to watch out for, your unemployment payments. If you're on unemployment and you want to file your return, you have to get the form from the state. So either you go into the New York State unemployment website and you print out the form, or you call them and ask them to mail it to you. But if you think that because you haven't gotten an unemployment statement that it's not taxable, that's not true. And that will hold up your refund and cause you all kinds of pain.
Yeah.
Most definitely.
Or you can, if you need help, you can come into our office. We'll download it for you.
Right.
And you can also call New York State Unemployment, and they will mail you a copy if you push the right options.
So you can go into the website, and I know when I'm doing tax returns, I'll go in with my clients if they remember their passwords. But sometimes people don't remember their passwords. So make sure you secure your form that'll say how much you had in unemployment. And don't guess. That's one of the reasons these refunds are being held up so much, is they're not matching, and it gives them the opportunity to hold your refund up, and that's what you don't want. Otherwise, you're going to be like our last client that's been waiting. I mean, our last caller waiting 8 months, right?
Yeah.
Other thing is, have you gotten all your stimulus? Maybe you had a new baby last year and you didn't get that. You didn't get the $1,400 stimulus for the baby. What can somebody do?
So when they file their tax return this year, they're going to then indicate that they didn't get it, and they're going to be able to recapture it on their tax return. And so now, when you file your 2021 return, you will get that stimulus
And
for
you
that
do
new baby.
you do the reconciliation form.
Yep, you
right?
do.
Yep.
Sure.
All right. Now, what if it wasn't a new baby? What if they just didn't get the stimulus that they thought they should have gotten?
Same thing. You're going to do that
And
reconciliation.
did we ever find out if the federal government is going to have us do amended returns for people that got the extra
No.
money on the unemployment? That's
Nope.
something we have to look
I
into.
called
too.
NATP again, and they still have not heard anything.
Okay. Another thing you want to do, and again, we're going to get to the phone calls in a minute, 8030930, 8030930, star 930 on your cell phone. If you're age 72 or older during 2021, even though they said you didn't have to do it in 2020 because of COVID, in 2021 you have to do your required minimum distribution. So you still have 3 weeks to get it going, and you want to make sure that you take money out of your pensions and annuities and IRAs that you haven't started to annuitize yet, and take it out, or else there's a penalty of 50% of what you don't withhold.
It's huge.
50%.
Of what you don't
I had
take
a
out.
doctor that came in yesterday, and her RMD is $80,000.
Uh-oh.
And so
Got
if
a
she
plan.
didn't do her RMD, it would have cost her $40,000 in additional taxes.
You got a plan,
Right?
And she
Gotta
did
do it.
She did some estimated
All
payments
right,
too.
we have a text.
Yep. It says, "Hi, I live in Derby, New York. I go to your office there. I like your services. You're doing an amazing job. I received a postcard in the mail. I'm confused. Are you guys moving? I need you here in Derby."
Yeah, we've moved our office and we've taken it over as a company-owned operation. So where are we at in Derby? It's a really nice
Right
building.
down the road.
We're about a quarter mile from Tops. We're in the medical complex. I know it's going to sound weird, but we're in a medical complex with
because
Dr.
you can
Haig.
really get sick when you get your taxes
Yes,
done
yes.
sometimes, you know.
But you're not going to. You can't miss us.
And you look up the address, but I'll tell you, we also opened up new offices in Derby. So I just said Warsaw, East Aurora, Springville, Hamburg, Batavia, Lewiston, and Alden.
Right.
And so we've been really
We've
busy.
been really busy, right?
We
So
don't-
we've taken over some of the offices that were franchise, and they're now company owned. So that's great for our people that are listening.
Yep.
Okay.
And I wanted to say that Bob has been amazing, and he does not get coal in his stocking this year.
No, Bob is great. He's
been-
our IT guy. All right, let's go to the phones. We're going to talk to Mark. Hi, Mark. How can we help you?
Yeah, I had a question.
Yeah.
I'm self-employed, and to date, I've been filing taxes jointly with my wife, and we're both bringing in about $90,000.
Is that what your net profit is?
My net profit.
Mm-hmm.
That is a good question.
Because that's what you're taxed on, not on your gross. You're taxed on your net.
Okay, and my question is, would it be beneficial for me to, incorporate or anything, or just?
Okay, well, incorporating many times is a best solution. First of all, it gives you a level of protection. Secondly, it gives you some, for instance, if you're self-employed, you can do a solo 401k plan, which gives you a great amount of deductibility too. But you, as a corporation, you have the protection of a corporation, so that we live in a litigious society, and this will ensure the fact that all they can do is sue the assets of the corporation. Plus, there's all kinds of other benefits as you incorporate that help you as well. You do have to take a reasonable salary when you're the solo member of a corporation, so that's not going to save you much money. But especially the layer of protection from a legal standpoint.
Okay.
Okay.
All right.
Hey, thanks, Mark.
Yeah.
I'm Esther Gillian.
I just want to say insurance is really good too sometimes, and so he should really call our office.
Right, and we can set you up on as a corporation and give you all the pluses.
Right.
We're going to take a short break right now for the news. 8030930, 8030930, star 930 on the cell phone. We'll see you back in a minute.
We are family. I got all my sisters with me.
Hey, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we're going to go to Mike, who's been so patient. Hi, Mike.
Hi. The $4,000 now child care. Now, is that come off to figure the adjusted gross income?
No, it's a credit.
Or does that come off actually?
It's a credit, 50% credit. So you would save $2,000 if you paid $4,000 for a child under the age of 13 so you could work, or if you have a disabled spouse and that's so you can work, and you're going to get a 50% credit of the $4,000 or $2,000.
But that comes
off of your tax.
It's a credit.
It's a
money in your
refundable
pocket.
credit.
Or you don't get a check in the mail for that.
Yes, you would. They changed
It
the law.
adds to your refund.
Yep.
Okay, so I thought the adjusted gross income.
No, sir, it's not off your adjusted gross income. It's a credit. It's money they're going to give you. If you paid $6,000 for daycare, you save $3,000 in taxes.
So your AGI is $6,000,
right?
Or your taxable income is $6,000. Your tax is $600. You spent $4,000 on daycare. That means you have a $2,000 credit. It eats the $600 liability, and then it gives you $1,400 as a refund.
Right.
So it's added directly to the refund then.
That's right.
Correct.
Okay, thank you.
All right, thank you, Mike. Yeah, so that's one of those big changes. I mean, daycare, they changed the law, and daycare, if people aren't letting their daycare provider, and that's one of my things in this note, if your daycare provider is saying, I'm not claiming it, you have to make them claim it because it is a lot of money. So we're going to talk about that in a minute. And here's Brian. Hi, Brian. How can we help you?
Yes. My mom had a life estate on her home.
Yeah.
And she passed away in May. And I want to sell that house now.
Okay.
Secondary residence for me. And I was curious, how do I find out the fair...
All right. So you didn't live there, right, Brian?
Correct. Yes.
Okay. So if it's a life estate and you were on the title and it came through the estate, You inherited it. Then you get a stepped-up basis of fair market value on the date of your mom's death. So what I'd suggest you do is contact an appraiser to find out how much the house is worth, and then you can list it for sale. And let's say that the appraiser says it's worth $200,000, and you sell it for $250,000. You only pay taxes on $50,000.
Okay, great.
Okay.
All right, thank you very much.
Thanks, Brian.
And the real estate agent he's using right now should be able to tell him what it was worth back in May.
Right.
Yep.
Absolutely.
Don't-
I will tell you, real estate prices are crazy, though. Okay. Other things to watch out for. And again, 8030930, 8030930, star 930 on your cell phone. Our text number is 716-8030930. If you have a bad debt, let's say that you got, or worthless stock. Let's say you got some stock that you have that has no value, and you're holding on, and it's worth 2 cents. Sell it.
Yep.
So then at least you get the loss up to $3,000. You have a dollar for dollar loss against other capital gains, and then over and above that, another $3,000. So make sure you clean up the book, so to speak. Right? If you're a small business owner with employees, did you take advantage of the employee retention credit? I'm not sure people even understand that. Right.
No, it's a hard thing. Not hard, but you got to really work with your payroll company because it's a savings of payroll taxes.
Right, but it's a lot of money. You can save up to $10,000 per quarter per employee. If you had a 25% drop from the previous year due to COVID. So if you had 6 employees that you were paying and each one was worth the $10,000 credit, you would save $60,000 in payroll taxes. I mean, that's a lot of money.
It's huge.
Right?
It's
So
huge.
again, and if you need help with that, give the EG Tax a call. Pay up your bills before year end if you want the deduction in 2021. I do think that in 2022, there's going to be a change in taxes. So if you're somebody that says, I need the deduction this year because I like for instance, the automobile industry, these people have made a fortune. And they probably want the deduction now. But if you pay it up before 12/31, that's a deduction on the 21 return. If you pay it off, if you pay it up after January 1st, it'll go on 2022. So depending upon your situation, and if you need that help, you can call us, and we'll be very happy to help you. Right?
Right.
Let's see. Oh, so you now still have some time to put money in your 401k plan.
You do.
Right?
Yep,
So that's a
absolutely.
good thing. You should do that if you can.
And if you're over the age of 50, you can do the catch up.
Right. And then I have here on number 9, pay your daycare provider up front because of the massive credit. Why don't you guys explain what that credit is and why is it so important?
Like we were just saying
The 24
to the caller, it's a 50% credit of the first $8,000 per child. If you have 2 or more children in daycare, it goes up to $16,000 in expenses. So a 50% credit of that would be $8,000 refundable now this year.
That's crazy.
I mean, hello. And so for those of you that have daycare providers that say, I really don't think I want to claim it or I won't watch your kids, I'd find a new daycare provider.
And this might also encourage people to go get a job, whereas it was cost prohibited to
I mean, you
do
got to say to
daycare.
your daycare provider, Susie, I mean, the taxes you're going to pay because she gets to take all the expenses, part of her office, part of her home, and if she's working out of her home, the stuff that she pays for entertainment, the books, toys, cleaning supplies, everything. So let's say she pays a tax liability of. Let's say her tax bill's $2,000. If you're going to get an $8,000 credit, pay up her taxes for her.
That's right.
You come out $6,000 ahead.
Yep, that's called tax planning at its finest.
Amen. Yeah. Okay, and then if you're a senior citizen, it's really interesting. I was on a plane yesterday, and
I'm glad you're not on a plane today.
I'm really glad too. But anyway, the flight attendant.
Oh,
she was like 73.
Oh, she was right, beautiful.
Well, but she was 73. And so I said to her, you can get an earned income credit this year.
If she didn't make a lot of money.
Because it used to be you couldn't get an earned income credit
if you were a senior citizen.
if you were over the age of 65. But now you can. So, if you're a senior citizen and you would really like to get out of the house, you can get an extra tax credit this year for that.
Yep, that's right. Did you ever think you'd see the day where a person over the age of 65 would be eligible for
an earned income credit?
Yeah, and there's
without
a lot,
children.
And there's a lot of people who get disability pay that qualifies them for earned income too. But it used to not once they were over the age of 65. So I'm encouraging many of my clients who I said,
well, that's if it's on retirement, it's still going to stop at 65 if they got the 1099.
no, well, you roll it to wages if it's disability.
No, you can't. Once you're 65, you can't roll it to wages anymore. That's normal retirement
Chris
age.
said you could to me
No,
before.
it's normal retirement age. So, but they will qualify for the earned income credit if they get a job.
Right, they should go get a little job.
Okay, then let's see what else we got here. If you have a trust, a lot of people don't you find this to be true, Chris? A lot of people that have trust funds, they don't fiduciary returns, they don't realize that they're supposed to take a distribution and they leave the money in the trust and the trust pays at a higher rate. So you want to make sure you take your distribution from your trust.
Right. Or the estate, if it happens to be, your parent or grandparent passes away in the beginning of the year and the 9 months clear up, and there was a retirement account that was cashed in because they had no beneficiaries, then the IRA gets it, and the IRA would pay tax at 37.5%. But if the money was received during the year and they can distribute it during that year, then that money can be passed on to the beneficiaries, where the beneficiaries' rates
could be as low as 10%.
Correct.
Right? So you want to make sure if you're somebody that had a trust set up for you and there is income in the trust and you haven't taken your distribution, you want to make sure you take it before the end of the year so that it can be taxed at your rate rather than at the fiduciary rate.
Correct.
Right?
Yep.
Which is higher. All right, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. And let's see, before we take our break, I think I mentioned it before, the SALT deduction may be increased in 2022. So what does that mean?
So currently, on your itemized deductions, if you itemize, the state and local tax section is limited to $10,000. So that means your income taxes, your property taxes, foreign taxes you paid, sales tax, that's all limited to $10,000. So for instance, Chris and I, we have a house and our property taxes per year are around 11. I was going to do 11 or 12,000. So we're done. So our income taxes don't count. And c'est la vie. Now on the state, we're allowed to take it, but it's really sad and shameful for somebody who lives in New York State.
Right, but they're talking about that would be one of the changes if it goes through.
Right.
Okay. All right. We got to. We're gonna read that on. Let's wait for the other side.
I could do that.
All right. We're gonna take a break right now. We'll be back on the other side. I'll talk to you later.
The bills make me wanna shout, kick your heels up and shout, throw your hands up and shout, throw your head back.
Hey, I love the Bills, right?
You sure do.
I do. I love them so much I can't listen to them.
I remember a long time ago there used to be buttons that you had around the house. It was "We're Talking Proud." Remember that?
Buffalo's Talking Proud.
Yeah.
Yeah, I love them so much I can't watch them because they make me sick to my stomach if they're losing. And of course, last week they did. So, oh well.
Yeah, well, I think our Christmas tree this year is red, white, and blue.
Mm-hmm. It's our frat tree.
Aha. Okay. We got another text here.
Yeah, it says, Esther, you mentioned earned income credit. I am 73 and still working as a 1099 in Florida. Does that apply to Florida law as well, or was that just New York State?
No, it's it's a federal law. The earned income credit now is extended to people over the age of 65. This is a new change. And so on your 1099, after your expenses, whatever is left, unless you're making a lot of money. If you're lower income, like under 20,000 from wages, then you would qualify for at least a partial earned income credit, depending upon your income. But yes, it's a federal law.
So we're winding down the year. Did you have a good 2021? May I ask you, Esther?
Yeah, I mean, I'm a very blessed person.
Yeah,
I'm very blessed.
It was a hard year. There were some heartaches that I had, but
Right.
that
But
goes with.
No, this is not Old Lang Syne week yet.
I know. I know.
Okay, and sell losing stocks. If you're, the stock market did great this year, but if you got some losers in your portfolio, get rid of them before 12/31. And if you have a heartstring tied to that stock and you said, but I just really I hope it'll come back, you can buy back that stock in 31 days. Mm-hmm. But it gives you the opportunity to take the loss now.
That's right. And you might have lots of gains. I know I did somebody's tax return last year, and he sold a whole mess of Apple stock. And when I did his return, he gulp, how much he had to pay. And so, but like you said, with the tax code, I'm really glad that they didn't do more capital gains.
I thought we'd be jumping off cliffs here.
Yes,
so okay,
I'm really pleased.
All right, and don't forget about the bed tax. Why don't you talk about the bed tax?
Sure. So anybody
I've heard
who's-
about bed bugs, but I didn't know about bed tax.
Anybody who's in a full nursing home, not just assisted living or live in rehab. It's somebody who's in a full nursing home. They charge a New York State assessment tax.
And their private pay.
And their private pay. That's right. It can't go through Medicaid. And their private pay, New York State charges an assessment tax of 16%. And so they don't tell you, but you get to have all that money back to you.
I think it's 6%, not 16%.
Oh, yeah, 6%. And so all that money is handed back to you on your tax return, on the New York return.
But if you don't file it, they keep it.
Right.
Isn't it a New York 258?
Yes. So
Yes.
why did they even take it?
So now think about this. If you paid $100,000 to a nursing home, which is completely possible,
right?
The bed tax is 6% or $6,000.
Right.
And if you don't file the 258, they keep your $6,000.
That's right. There's another text that just shot in. It says, how long do I have to withdraw the money from my mom's IRA? I just heard you say something about that. Thank you very much.
Okay, if mom is alive and she's she's 72 or older, you go to this actuarial table that says this is based how long we think she's going to live, and that is a systematic withdrawal every year.
Right, but they got it from mom. It's not. They inherited it.
So you think they inherited it?
Yes.
You mean the 10-year thing?
Yes.
Right? Okay, so tell them, Chris.
So you have, since it's mom, you have 10 years to take the money out of the IRA. So it used to be you could spread it out over your lifetime. That just recently changed.
That's true. Another change.
So if the person you received the IRA from is more than 10 years age difference than you have 10 years to take it out. If the age difference is 10 years or less, it goes back to the old rules where you have your lifetime to take it out. You want to talk about confusing.
That's true.
I mean, but that's where you and your financial person and your tax person really need to sit down and figure out the best plan for you.
Okay. Thank you, Chris. All right. Now, the other thing is make sure that before you go, you're sitting there to file your return, more than ever, make sure you have the right information. That it is just a horrible conundrum that has happened this year with all the COVID garbage and people not working. And I know they got a gigantic shortage of help at the IRS. Make sure when you file you have the right information, that you have all your 1099 forms, that you have all your interest, all your dividends, that you have this form 6419 if you had the advanced child tax credit. Make sure you have your unemployment forms. And remember, you have to go to the state for it. And because if you don't, all you're going to do is hold up your own refund.
Yeah, absolutely. It's so hard. It's better to just wait a little while to file and make sure you have all your ducks in a row, because especially like you said at the top of the show, we check with the IRS and they're not sure if it's going to start
maybe
end
the
of
17th
January,
of
maybe
January,
February,
maybe February the 1st, maybe February 17th. So that means if they're not processing returns, you rushing to get it done, and it's done incorrectly when they finally open up, it'll just hold up your refund.
Yeah, look at our first, I believe it was our first caller of the day. They didn't do the 8962. And so now it's now December, and they're still waiting for their refund. Last year's refund.
That's true.
So that's why you got to make sure
Okay, and now, we hear there's no pressure right now, but direct deposit is the fastest way, assuming your tax return gets processed, is the fastest way to get your refund. Go open up your bank account now.
Yeah.
And make sure that what you put on your tax return is correct. Because if you put incorrect banking information on your tax return, it holds up your refund.
Yep. And this is the last few weeks here, and I've been doing lots of offers and compromises. So if you're somebody, also, I just want to say, if who owes lots and lots of money to IRS or New York, you've heard those commercials where you can settle pennies on the dollar. And I do that, and I love to help. So give us a call if you're in that situation.
Right. And the other thing is, if your tax, you've been waiting for your refund, and you're not sure it's correct, and by the way, we can't do electronic returns for 2020 now anymore, right? Because that's all being
right, not till the IRS turns their computers
back on. But if you need help and you think that you haven't gotten the correct information, you can call us at 632-7886, and we'll help you with last year's refund that hasn't come or was incorrect.
Yeah, absolutely.
Okay, now something from Christmas. Everybody's looking for extra money for Christmas. And that tendency is to look at your 401k plan at work and you think, I'll just take it out of my 401k. Is that a good idea?
No, because then you're going to pay the 10% penalty, and you're also going to pay tax. So
state and federal.
Yep. So not a good idea.
So what can you do?
You could take a loan from your 401k sometimes. That would be good. You can borrow the loan, maybe get a Christmas loan, borrow the money from your 401k.
You get a 0%, if you have good credit, 0% credit card, usually a year and a half at 0%. That's another thing to do. The important thing is don't take the easy way out and just think you're just going to go down to your employer and say you have a hardship withdrawal and take the money out, because if you're in the 20% bracket, and with the state of New York, you got 20 plus, if you're under the age of 59 and a half, 20 plus 10% penalty, plus the state of New York. So you're looking at approaching 35, 36%. So on $10,000, you would lose $3,500 in taxes.
And then don't forget, there was lots of people, when they filed 2020, they were allowed, if they were affected by COVID, which so many people are, it's just so sad, they could take money out of their IRA, or 401
or pension plan,
and avoid the 10% penalty, and also spread it out over a number of years. So make sure when you do your return for 2021, if you were one of those folks who decided and opted to spread it out over a few years, you take some of it and spread it.
I'll tell you, if you did that option, I think it was an 8915, right? If you used the form 8915 last year, you said, okay, I took this money out, but I only want to be taxed over, if you took out $90,000 over a 3-year period. So it's 30, 30, and 30. That means this year you're going to be taxed on one of the 30s. And don't say I'm not putting it on my tax return, because they will absolutely correct it for you and hold up everything.
They really better hire more staff, because they got lots to do. There's so many changes and so many things. There's a new tax that came in.
Yeah.
We have a high deductible plan with an HSA. We just had medical stuff event with charges. We owe up to $5,000. Rather than deplete our emergency fund, I am thinking of taking money from my IRA and deposit it into my HSA. What do you think? Thanks from a loyal customer.
Oh, that's great.
Appreciate it.
What do you think, Chris?
Well, you're going to pay tax on that money from your IRA. So,
which is kind of defeating the purpose,
right? Right. Because if you're under 59 and a half, you're going to get hit with that 10% penalty we were just talking about. Right. So even if you're putting it in your HSA, you do get the subtraction, but you still get the 10% penalty.
So on the left-hand side, let's say you took the $5,000 out, you're going to be taxed on $5,000. If you put that $5,000 in your HSA, that's a deduction, so it's just a wash. But like Chris says, if you're under the age of 59 and a half, they're going to charge you a 10% penalty, which you can't avoid.
Right. This is something where you might want to look at getting the loan.
Since you're our loyal client, please call us and we will help you to figure out a way.
Yeah, yeah.
Right?
Now, if they're under the age, they'd be hit with the penalty. What loan are you thinking? A loan
A
against
loan
their-
against their IRA.
Right.
Yeah.
They do. Or their
Or their-
pension plan.
their pension, sorry, not their
plan. Right,
IRA.
they can't do an IRA.
Right.
All right, but something I wanted to mention is one of the other things that changed was that if you had a baby or adopted a baby last year, you can take up to $5,000 penalty free out of your IRA.
That's cool.
So that's something that you might want to look at. That's at least that's something
You know,
that you can
we're
do.
writing all of our policies and procedures and tax changes. This is a big head jump ahead for me. I'm working on that.
Oh, that's good.
So I appreciate it.
Good. Well, I appreciate you too.
Thank you. Yeah.
But anyway, here's the whole thing. You got 3 weeks. I know this is not the time of year that you're thinking about cookies, and you're really not thinking about taxes. But there are the changes in the tax law are unbelievable, and some of these changes, like I said, my commercial. If you make $15,000 and you got 3 minor kids, you can get a refund if you pay no taxes of over $27,000. So that is gigantic money, and you can't. And so just because you think to yourself, well, I'll just use last year's tax form. Well, but that's last year's law, and you got to do this year's law, and it's just unbelievable. Some of the things that are in the tax law, and they're really, I'm going to say, pandering to people that are lower income. So especially if you got kids with young children, make sure that they have their taxes looked at professionally. It's so much.
It's so funny.
much money. And if you look at your tax return, you might say, "Wow, but we got an $8,000 refund." Yeah, but it might have been $28,000.
Yeah,
if you knew what to do.
I've been helping this guy, and he does his return himself. He's a senior citizen, and he does it all by hand. And so the IRS shorted him like $600 of his refund. And I looked at it, and he did a pretty good job. It was a Schedule D that he messed up. So really, the IRS owes him back $485. And so we did an amended return. But don't just settle for what they have to say.
Right, absolutely.
Follow through.
Okay, and so Auntie Esther and the elves are at EG Tax. We want to help you, so give us a call at 632-7886. Go to our website at egtax.com. Have a great week. I hope you don't get blown away. Go Bills. Talk to you next week. God bless.